Mark Jarvis, CEO of Giga Metals. We have a very large, low-grade, open-pittable nickel and cobalt and sulphides deposit. And we recently completed a PEA that models nameplate capacity of 37,000 tons per year of nickel with a 37-year mine life. So truly an immense project.
Mark, good to see you.
Good to see you.
Well, we have spoken at the Intervening Period, but
That's true.
What a crazy couple of years.
Yes.
Have you been able to function and operate as normal?
Yes. I mean, most of this business is on the phone talking. So, as you know, it's been a pretty easy pandemic for people that have money and, are able to work on the phone and online. I really feel badly for people that, don't have those advantages, but...
Yeah, well, what about for companies that haven't got money as well? There must have been an equal and similar boat.
Well, the capital markets are still open. I mean, people are raising money. We've been raising money. It's where it really bites is in actual, drilling operations. There's a labor shortage. There's these supply chain issues. I mean, if a drill breaks down, getting parts, it's funny little things that suddenly there's problems.
Yeah, I mean, I thought the interesting thing about this year was the way that different companies approached, changing operations, because obviously some are operating in jurisdictions that are a little bit more difficult. South America, for instance, really COVID hit hard.
Yep.
You guys in Canada, certain companies suffering from, say, labor shortages, increasing costs.
Yes.
Delayed assays if people are drilling. So,
absolutely.
But you've had to find workarounds, haven't you?
As best as you can.
Yeah.
But as I say, the money's still there. The capital markets are still open, and that's kind of that's the lifeblood of a company like ours, isn't it?
It is. Right. Those are those kind of general points affecting all companies. I want to talk about nickel. Nickel. We keep saying on our weekly nickel show, we need all the nickel that's currently on display and more. We need to find a lot more. Your project, we've talked a couple of times over the past 18 months about what's going on. When you look back, what would you have done differently?
I can't think of anything I'd do differently. It's you've got no choice really, except with a project like this. If there's money available, you drive your project forward.
Right.
And you hope that the market will recognize what you're doing. And so I just find that it's a really fascinating time right now for someone with an asset like ours. So just to review, it's really big. The economics are marginal at the low end of nickel prices. But
being what? Because I think when your PEA came out, we said $10, you've got a good project. You've got a project which is beginning, the economics starting to look good. It's been a strong nickel environment for the last year.
It's about $9 a pound.
Right.
Now.
Okay. So it's getting there. Expectations are that will continue to grow. It looks like the beginning of a super cycle for nickel.
But just to put some numbers on it, at $7.50 a pound, which is where we ran our PEA base case, we had a PV8 value of negative, $400 million. At $10 nickel, that becomes about half a billion. This is all U.S. and this is, at a discount rate of 8%. At $12 nickel, it's well over $1 billion, and it just goes shooting up from there. So it's right at that knife's edge in terms of economics, and so our economics are poor at the low end of the range. But our claim to fame is that if you look at the other 15 or 20 large undeveloped projects out there of all types, sulphides, and HPAL projects, our economics aren't as bad as theirs, which leads to an interesting question. HPAL projects are getting built.
They are.
This thing isn't built.
They are, and I want to come to that. But okay. I want to stick about pricing. Obviously, nickel's had a good run of it. Okay, so you doing a PEA at 750 is great, but if we did a 3-year average, that's at the high end, right? So we all need to believe that the nickel demand, which people are forecasting, is there. And the question is, how do you play it? You're a 43 million, 45 million market cap company today. You've had not a lot of options over the last 2 or 3 years. So it's a question of how quickly do you rush into this? Because you've raised some money recently.
Yeah, we raised some money in the spring, and we spent most of it in the summer.
Right.
And we shut down our drilling program about a month ago now.
Yeah.
So we did a bunch of resource drilling, infill drilling, geotechnical drilling, seismic around the where we want to do the tailings management. We're collecting data to support the level of detail you need for a pre-feasibility as opposed to a PEA.
So why would you consider that rushing into it? Because again, you're not seeing that reflected in movement in perception or momentum in the market. You're off from when I last interviewed, 65 cents down to 50 cents. So people aren't coming with you despite the fact the nickel price is shooting up. So where's the disconnect?
You've probably heard of the Lassonde curve.
I have once or twice.
Yeah. So I think about that and where we are, in the Lassonde curve. We're not a discovery play. The drilling that we're doing is infill drilling. I don't expect any surprises. This is very much at the development stage, also known as the orphan stage. And it's an interesting time, to look at as an investor, I think, because quite often during that long drawn out development stage, the stock price is quite cheap. But you don't know when things are going to change. You don't know when things are going to happen. And so what I do as an investor with a situation like this, if I like the asset, I'll pick an entry point and just, close my eyes and forget about it, because you don't know when the changes are going to come.
Yeah, but that Lassonde curve, okay, great, I buy it. Okay. Famous Lassonde curve. Can't argue with it. Except I'm going to.
Okay.
40 million market cap, you need a certain price to become interesting, become NPV 5, 6, 7, 8 positive, right? And a bunch of dilution to come. So you're going to need to raise some more money, because the money you spent this on wasn't a lot. You raised what's just under 6.5, right?
Yes.
I don't know how much of that went in the ground. How much went in the ground?
Well, the bills are still coming in.
Right.
But just assume almost all of it.
Right. Okay. So de minimis G&A, most of it goes in the ground. Okay. So let's say that's true. It's still not a lot of money that's gone in to provide, therefore, not a lot of information which can move this forward in terms of the PFS, right? Surely this is more about timing for you. Waiting. You've got to wait for the nickel price to do some of the heavy lifting before you start going out and raising more money.
Well, it's an interesting conundrum, because, as you say, we've got a minuscule market cap, and we've got a project that fully built would be about $2 billion US. So how do you square that circle, right?
Yeah.
I mean, do you just keep diluting your stock endlessly to push it along? I mean, there's an argument, just stop spending money and just wait for the market to come with you. There is that argument. But I think how you square the circle is by getting strategic investors involved at the project level rather than at the stock level. And that's entirely our focus. And I can tell you that the mood has changed noticeably just in the last few months. I think, what people are starting to realize, what Western battery companies are starting to realize, is that they're facing an existential threat, because the Chinese have got their supply chain figured out.
Yeah.
They've got their lithium figured out, they've got their cobalt figured out, and they've got their nickel figured out.
And they got the money sorted.
So they're building, to get to 35,000 tons a year of nickel with an HPAL project is about a $3 billion build. And they've been building these things with an internal rate of return pre-tax of 1, 2, 3%. Even, these are the successful ones. Like Ramu, for example. It's been 13 years in operation. I think they're getting close to paying out their capital costs. No Western company would build these things. And when they do, they're disasters. But what the Chinese get is a long-term supply of nickel at a price that they can predict, which is the cost of production. So it's all about the cost of production.
And value they can capture further downstream.
Absolutely.
I get it. But let's come back to you, okay? Because it comes back to, you said, you could argue the case, we just sit and wait this thing out. But you're hearing differently. You're hearing Western, potentially strategic investors and industry partners are starting to get the fact that if they don't move quickly, they're going to be caught short. Is that what you're trying to tell me?
Yeah, I mean, if you just look at a couple of recent deals, BASF, did a deal with Nornickel for nickel supplies for a gigafactory in Finland. That's a good start. I mean, obviously, you go to the producer first, but BASF has ambitions far beyond that over time, and there's not that much actual produced nickel around. Panasonic did a deal with BHP. They're building a gigafactory in Japan as a joint venture with Toyota. So they're getting nickel from Australia, from BHP. Again, it's a good start. And there are other battery companies out there that haven't got anything figured out yet. And if they don't, they're going to be out of the battery business. So I'm just sensing a little more eagerness.
Okay, so again, I just want to try to understand where you're coming at it. So you feel that the way to move this forward, because there's a massive disconnect between market cap, the amount of capex you need to raise, whether it be phased or not, it's going to be problematic for you. The multiples are way too high. So what are you actually doing about that? You obviously spend a little bit of money, say $6 million in the ground. It's giving you a bit more information, move towards PFS. But do you need to do a PFS?
My theory is that the more we de-risk it, the
What's
better
that mean,
shape
though?
we'll
What's
be.
that mean for a strategic?
Well, I think, if you've got more advanced engineering with more detailed data behind it,
right,
it does represent less risk. And I think it just means that at the end of the day, we're going to get more for what we've got.
But do you think risk means different things to different people now? Because if I look at the Norant, potentially BHP, Wyloo joint venture structure, I mean, wow, okay. Not sure what they're saying that we don't know at the moment, but we'll come on to that in a second. But coming back to you, do you just need to raise money to go and get the data? Do you need to compile it? Because a major or strategic is going to come in and go, we'll take your data, we'll do our own modeling, thanks very much. Sure. Don't waste your money on a PFS or otherwise. So how are you coming at it? Well, that's
true of a mining company.
Right, okay.
But that's not true of a battery company. We've even had calls from car companies.
So you're thinking, okay, so it's a battery company. Well, you mean battery company when you say strategic?
That's one of the strategics.
Right.
We're not really talking to mining companies. I think it's premature. Mining companies want to see more data, even then. So I think that's going to be the key move. And I sense, I mean, I don't guarantee anything, but I do sense that things are moving along rapidly. You're familiar with Martin Vidar, president.
Yeah, of course.
Okay, so he had a career at Sherritt, where he was selling nickel and cobalt to end users, and so he's got relationships established with all the strategics, and we also have Bob Morris on our board, who a week before he joined our board, he retired from Vale as the senior vice president in charge of worldwide base metal sales, so copper, nickel, cobalt, and precious metals. So, they're very plugged in to that end user market.
Right.
And all the various forms of nickel.
Right. Well, it's all the different forms they need to be good at, because end sales, we're nowhere near that. So again, coming back, I want to be able to walk away from this conversation and go, do you know what? I'm really clear about where the money's coming from, what's it going to cost, even if it's at asset level, not corporate level, okay? And so, what's this year coming forward look like for you? What are the milestones that you think, if you can deliver those, you've got a chance of getting this company moving? Okay,
so first of all, how much? We think from where we stand to being shovel ready is about $30 million US.
Okay.
And probably about 3 years, and that's including doing an environmental assessment.
Yeah.
Which is, again, another reason why the Chinese are building in places like Indonesia.
Yeah.
But in a place like Canada, you've got very high environmental standards. The flip side of that is if you're buying nickel from Canada, you don't have to worry about the ethical sourcing issues, which you might have to with
and again, lots of conversations around zero carbon and tax credits, carbon credits and the like. All that, I assume, will come and be part of your messaging further down the line. So $30 million, where's that come from?
Well, we're hoping that will come from a strategic.
Entirely, 100%.
Yes.
No dilution for shareholders.
Yes.
Okay.
That's what we're hoping.
Right. Any conversations?
We're having many conversations.
Right. Meaningful conversations?
Some of them, yes.
Okay.
Meaningful conversations. Nothing that is what I would describe as material.
Right.
Meaning, where you're at the offer counteroffer stage.
Right.
As soon as things get to that stage, I won't be talking the way I am talking right
but they're
now.
curious. They're curious about what it is that you potentially have. The PEA's out, I get it, but it's curious about when you're ready to have another conversation with them and what more information you're going to give them other than what they know today.
Some of the conversations have been going on for 3 years, Matthew, and some of them have been going on for a month. So,
right. But nothing meaningful.
Nothing material.
Material.
Yes.
Okay. Nothing material. So 43, 45 million market cap. Right. You spent the money you raised earlier this year.
We've got about 2.7 million in the treasury, roughly today.
But you've down tools for the season, have you?
Yes.
Right.
Yes,
okay.
Yeah.
So you're going to have to trot out to the market pre-Christmas, post-Christmas, and say, "Have I got an idea and a plan for you guys?
Right.
Follow me into battle. Here's what it looks like. What's that message?"
So backup plan. You do an equity raise, but we're really hoping we don't have to.
Okay.
So, but I will always do whatever I have to do to drive the project forward.
Right.
I don't. I've looked at staying still. I've considered that, and I just don't think it's the right plan. So.
Okay, so you really are focused on the strategic. You're not just saying, because a lot of people come in here and they go, "Oh, we're talking to strategics. They're strategic." Nothing happens, and they have got to crack on. They've got to raise money, and they've got to get on with the business of running the business.
And that's
right?
entirely possible that could happen here.
Right. Okay. So how does the Norrent deal make you feel? Because there's a project which I'd say is not as strong as yours.
I couldn't believe it.
In the middle of a swamp.
Yes.
Where the infrastructure requirements are significant, even meaningful for BHP, and they're going to build a little city underground, it seems.
Exactly. They're going to dig down through the swamp.
Yeah.
Dig out a giant cave.
Yeah.
And put the mill in it. It's
which has been done before, but
I'm sure
it must be quite expensive.
Yeah.
Right?
Yeah. And again, it's a swamp. You need to spend more than $1 billion just to build a road in there. It's a very interesting thing. And I look at that and I go, huh. Things that make you go, I mean, what does BHP see that we don't see?
Yeah, what do they know that we don't know? I'm thinking water, I'm thinking environmental, and I'm thinking First Nations. Good luck on the timing. Maybe time, because this is a multi-site. The thing with projects of your size and their size and others is it's multi-decade, multi-generational mining. So I guess the infrastructure can be amortized over long periods of time and the upkeep, etc. So that's something at least. But boy, that's ambitious.
Yeah. And nickel itself, I mean, if you look at a 40-year chart of nickel, it's very spiky, isn't it? I mean, it just kind of does nothing, and then it just goes crazy for a couple of years, and then it goes back to doing nothing. In 2020 dollars, the average price over the last 40 years was $11 a pound.
Exactly.
That surprised me once I saw that translation at $20.
We knew that.
And my belief is that because you've got this new source of demand that is growing and is going to be a significant long-term source of demand, batteries, because of that, nickel this time, it'll get spiky and it'll settle back as it always does, but it will settle back to a new level in my view.
Higher lows and higher highs.
Yes.
There we go.
Yes.
Okay, so what is your view for next year in terms of what the market's going to do? Because I think we talked before we started filming about what some of the analysts were looking, or how they've traditionally behaved and traditionally forecast. Right. Can you see that changing? Is that going to give the market impetus? Because that information feeds into the JP Morgans and the Goldmans, etc. So
it's really difficult, I think, to predict a year out.
Yeah.
Although I will say that, if you look at the LME stocks, they're just declining almost every day.
Yeah.
Bob Morris tells me that you can't buy briquettes right now.
Yeah.
You can't buy MHP, which and those are the two most popular forms for battery makers. There's just none available. So things are getting tight in certain product areas. I mean, there's never a shortage of ferronickel. The world doesn't need more ferronickel. But MHP and briquettes, so that's why we're looking very hard, and in fact may include in our pre-feasibility. We're still not sure. Adding on a circuit to turn our concentrate into MHP and sell that product directly.
Right. Okay.
It's an interesting thought.
I mean, we talk. We've got this weekly nickel show. And we talk about nickel every week because we find it a very, very exciting commodity. And like I say, we need everything. We need all of it. We need everyone to kind of work out. It's just a case of, does the kind of lack of ability for companies like you to get financed at these prices, does that sort of drag the price of nickel up, or does the fact that the current nickel situation, I say the inventories are running lower and lower all the time, is that going to help your telling a story to strategics, to the market, or possibly getting different type of financing in place? Is it push pull? What?
Yeah, I think the strategics are starting to realize again that they're in trouble if they don't figure out their supply chains. Like it's existential. And so, you can look at the world of large known projects, and there we sit, and there's the others, there's Noront. And, what distinguishes us is the pure simplicity of the project. So in terms of technical risk, it's as low as you can get. We have good recoveries for this type of project. We have one mineral, pentlandite, that we're recovering. So the metallurgical circuit has to do one thing and one thing only. Recover pentlandite, suppress everything else.
Yeah.
That's it. We don't have a wherrierite. We don't have, all sorts of alteration products that require desliming circuits. We don't have to do magnetic separation. It's just crush it, grind it, float it. Predictable, simple, low tech, and that is low technical risk. And that's part of why we're getting a lot of attention, I think.
Right. It is, but it's also high capex.
Yes.
So hence the need for the strategic. That must limit the number of strategics because it's a big number, right?
Well, yeah, but if you compare it to an HPEL of the same size, I mean, we model building it in stages, spending a total of $2 billion US.
Yeah.
The same capacity with an HPEL project is $3 billion. So you're risking more money to get to the same level of production.
Yeah.
And it's much more complicated. It's much more prone to technical failure.
Well, there's a company who perhaps don't like us saying this, but or won't like you saying those numbers. They've got a sub $700 million HPAR project in Brazil. So maybe it can be done for less. I don't think it can.
Have they built it?
No, but they've raised the money for it. So the assumption here is that the bankers know what they're talking about and doing.
Okay. Okay, that's an interesting assumption.
Let's watching eagerly from the sidelines. Okay, look, I think it's been a sort of interesting watching brief your project from the side because it has got the scale as in the simplicity of processing. You just need to get absolutely 100% focused on the strategic partner.
Right.
Have you set yourself a timeline for when you need to do that, or do you revert back to just the waiting game? If nickel gets to 15, 20, easy.
I think by the first quarter of next year, I'd like to have something done. Yeah,
that's ambitious.
Yeah, and I can tell you're skeptical.
I'm not skeptical. I don't judge.
Okay. Oh, very good. Okay, so but I can just tell you from what I'm seeing and the conversations I'm having. The interest is real, and I just think something's going to happen. We'll see. No guarantees.
We'll see. Well, we will see, and I would love you to come back on and tell us
if it happens, it'll be out of the blue. It'll be a complete surprise.
To you?
Not to me. It'll be a complete surprise to you.
Well, look, Mark, I appreciate you coming in. Lovely to see you. Yeah. You're over for this conference in London. So you're here to see, are you talking to strategics here? Or are you just generally shareholders more broadly?
Just talking to shareholders, current and future.
Fantastic. Right. Thanks very much for coming in. Good to see you again.
Thank you, Matthew. Cheers.